Hey traders, it's Eddie Z here. And before we jump into this episode, let me set the stage for you. Today's conversation is a little different. I'm the one being interviewed by Louise Bedford. Now, if you don't know Louise, you should. She's the best-selling author of 6 books on the stock market. She's the founder of tradinggame.com.au, that's right, Australia, and she's the host of the long-running Talking Trading podcast. And for more than 20 years, she's been mentoring traders around the world on both the technical and psychological sides of the market. She's helped thousands of traders build a kind of disciplined systems that actually last. In this interview, Louise and I cover a lot of ground, how I survived 3 major market crashes and what they taught me about risk, discipline, and mindset. We also talk about why technology can make or break your trading and how to test your current machine to see if it's truly fast enough. This was really a fun conversation, and Louise is awesome, and I think you'll get a ton of value from this. So let's go ahead and listen to my conversation with Louise Bedford.
Eddie, welcome to Talking Trading. Look, the real key that everybody has been wanting to know from you is that you lived through 3 major market crashes. There was 2000 and then 2008, and let's not forget 2020. Now, what did those crashes teach you about risk and mindset and discipline?
It's such a good question. So just to give you a little backstory, because I would say for me, the one in 2000 was the most traumatic. I was a young man. I had started as a stockbroker in the early 90s, and you know me, or folks may know me as a trading computer guy. I'm a computer geek since the age of 10. And then you layer on top of that, my dad was a floor trader on the New York Mercantile Exchange, and I had been going to work with him even as a kid, going down to the floor, New York City, the old World Trade Center, and observing the activity on the trading floor and the level of insanity, men behaving badly. I loved the energy growing up, so I was really enthralled with the whole idea of doing what my dad did. So I always wanted to work on Wall Street. So when I finished college, I started as a stockbroker. We're talking the early 1990s. And back then, everything was all technology. And being a computer geek already, those were the stocks I was recommending to my clients anyway. So it was Intel, it was Microsoft, and then a few years later, it was AOL, and then Qualcomm. And it was pretty easy to make money trading. You were right probably 7 times out of 10. And I just kind of had this methodology where it's so boneheaded. I would buy a stock for a client, a big name tech stock. I'd hold it for like 3 to 4 months. And no matter what it did, in 3 or 4 months, I sold it. It was a commission-based business. So it was a way to generate business. And I was in the high-flying stocks. So this strategy averaged my clients like over 27% a year from the early 90s all the way up to the year 2000. And in those last few years, 98, 99, in the very beginning of 2000, the market just exploded. In fact, from the low of 98 to the high in 2000, the NASDAQ tripled. So from the time when I very first started, the NASDAQ was trading around 650. And by 2000, it was 5,400. I know
I remember.
It's a small number compared to today, but it made this phenomenal run. So from a trading point of view, here I am, a young guy. I'm in my 20s, very cocky, became very arrogant. I made a lot of money very quickly. I thought I could do no wrong. And I think that is the worst thing that can happen in trading, is to have a number of really good trades right in a row, or even one good trade right in a row. One good trade as your first trade where you do really, really well could just ruin it for yourself, because the way you learn how to trade, as hard as it sounds, is to get hit over the head with a hammer a couple times, to really get your bell rung, if you will, is how you learn how to trade. And that correction that happened in 2000. And I was not only my own money, but clients' money. I had built up to 500 clients and, not looking very intelligent to your book of business can really destroy your emotions. So I actually thought about getting out of the business. That's how painful it was watching myself money.
Your ego takes such a blow in that situation because it's public. I want to get back to just your background a little bit more because
Sure.
I'm really fascinated that you come from an area which influenced your money scripts. So with your with your father being a part of this industry, being able to see that from a young age, being surrounded with that atmosphere, how do you feel that has influenced your views?
Oh, so much. My father was like superhero to me. I just thought he was the coolest guy in the world, and what he did for a living was so much cooler than what my friends' parents were doing. And going down to the floor, like normal rules even as a kid, they just didn't apply. It's just men cursing, sweating, smoking, behaving very badly. And honestly, the floor of the New York Mercantile Exchange, and if you don't know, that's where they were trading the energy futures. So it was heating oil, gasoline futures, crude oil futures, as well as platinum, palladium. And the technology wasn't like today. So everything was pit traded. It was very, very crowded. It was all men, phone wires, because the way an order got routed to get executed was a guy would call on a phone and he'd have to write a ticket and hand it to a runner, run it into the trading pit, find his broker. It was so crowded, you could barely move in there.
Yeah.
And just the whole excitement of it was just very, very influential. I knew I wanted to do that. In fact, I didn't really want to go to college that badly, but my dad was like, no, you're too smart. You're going to college. So I worked down on this floor every summer in break during college, Christmas, and like spring break. I was always there. I just loved being there. Wall Street was in my blood, and my brother worked down there too, my older brother. So, I mean, it really became a family affair. So it definitely influenced my life, my scripts. I mean, growing up just outside New York City, all by itself, it's its own thing.
Yeah, its own mystique for sure. And the thing that I really like when I've seen videos of trading floors, it's almost like a wave of human emotion travels through the floor and then another wave comes through. And now with technology, what we're doing is rather than identifying those human waves of fear and elation and joy and hope, we're looking at a chart. We're identifying those same emotions on a chart and using that for our own personal benefit. Has your trading had to change because you're used to seeing that physicality and almost that testosterone-drenched adrenaline?
And it's interesting you say that because a lot of floor traders could not make the jump to electronic trading. They just weren't able to do that. I mean, you would hear a pickup in energy just in the volume. It was just people yelling and screaming. And you would hear volume come into the market, and then the market would start, you could feel the energy. So now you need to use indicators. And I started as a stockbroker after college, and that was all electronic. The New York Stock Exchange wasn't really an open outcry market the way commodity futures used to be. And the commodity futures actually hung on all the way past the year 2000 with the open pit trading. I mean, it's kind of a lot to unpack here.
Yeah.
But so now we're trading electronically, and so you have to look for those waves in volume and reactions to big blocks. Another one is news, although I don't think trading news is not a constructive way to trade. I think more of a normalized volume patterns when you can spot institutions accumulating a stock. I'm a stock trader. When you can spot institutions accumulating a stock over time, that's when you can start to get a feel for where that wave is, because it's the institutions who control the vast majority of the money in the stock market. It's the really big hedge funds, the pension funds, the sovereign wealth funds are even way bigger than the pension funds, and they control the money. But yeah, definitely it's a totally different feel. And just I'm going to bring it back to your question about what I learned. And so going back to that level of cockiness, I was still in my 20s. But in the year 2000, I just turned 30. And what happened was the market corrected. I took such a blow to my ego, to my bank account. Plus, like, everybody I knew had an account with me. I had some kind of famous people who I had acquired as clients. I had met this guy who was in a rock band. He introduced me to his business manager. I got lucky. I made him some money. He gave me a whole bunch of clients from various bands that you may be familiar with. And so my ego was very, very big. It got shattered. And I thought about quitting the business. But I was just determined to figure it out. It was in my blood. I was like, no matter what, I'm going to figure this out. And that's where I really learned that having a repeatable system, a system that has a set of rules, has entries and exits, when to admit you're wrong, that's when I really learned how to trade. And I had to really kind of tiptoe back into trading and kind of develop the system. And it's based on a book called How to Make Money in Stocks by William O'Neill. I don't know if you're familiar with this book.
I am. Yeah.
Okay. Definitely, to me, the Bible of trading stocks.
And
Excuse
with your background with that floor trading and then moving into more of a technology area, for the person listening, I really want you to apply this to your own trading, because what we are trading is human emotion. We are being able to witness grand shifts of money from one instrument to another. And if you can, as Eddie says, systematize your methods, you're going to be able to hook into those streams of money and slipstream so that your portfolio grows along with your analysis skills. Now, Eddie, I want to talk about technology, because one of the things that you've got me thinking about is that traders often think that the charts are the key, or where their broker is the key. But your premise is that technology can make or break a trader. Tell me more about that.
So, yes. So, as we're talking about, your emotions are so important when it comes to trading. Being able to manage your emotions. So even if you have a systematic approach to trading with a set of rules, set of entries, set of exits, human beings are not robots. We are emotional beings. And very little things can set off your amygdala, your fight or flight response. And the minute you trigger your fight or flight response, you're going to make a series of bad decisions. You make one bad decision, and it just spirals out of control from there. So when it comes to technology, one thing that one of the biggest mistakes I see traders make with technology is not realizing the sheer volume of real-time data that's pouring into your machine through that broadband connection. Nowadays, with the speed that we have and the computing power that we have, you're looking at 10 Netflix movies at the same time. Imagine if you're trying to watch 10 Netflix or download or stream 10 Netflix movies at the same time. That is a lot of data. And you know, when you first turn your TV on and you put on the Netflix app, or you do it on your computer, there's that spinny wheel. And what's happening is all of those data streams for the menu, the thumbnails that show up, they're all loading in the background, so that when it does load up and you look at a movie highlight, it looks like it loads instantly, but it's not. It's streaming in the background, and it's what's called buffering. There's a time delay. In trading, you have no time to buffer. And that's the problem. So if you're taking in that much data, the data needs to be spot on real time. Your computer needs to take in that data. It needs to turn it into your charts on all your time frames. The indicators all have to show up because these indicators are going to tell you when to buy or sell. It all has to happen in spot on real time. And then there's like time and sales, and then there's news, level 2, maybe you have a trading room going on at the same time, which is a resource hog. And if you're trading on an older or a slower computer, that data can get just a little bit bottlenecked. So can be just a fraction of a second, can be as much as 2 seconds. If you've ever been watching the financial news and perhaps they have a forum of people that are talking, sometimes they talk over each other because there's a delay somewhere. That is similar concept. It's slippage. It's a data stream that's slightly off from the real world price. And if you're making decisions based on a price that's a little bit stale, and so you put in an order to buy a stock or crypto or Forex, whatever you're trading, the price you get filled at is a little bit different than what you expected in the wrong direction. That could trigger your fight or flight response. And your whole day can go out the window, can spiral out of control. For me, if I get triggered, I used to engage in something called revenge trading. I have to make it back. And then I just do one trade after the other, and it's just a series of bad decisions. And it usually does not turn out well.
Yeah, they cluster, don't they? These decisions.
Yes.
Mm-hmm. And I guess the larger the time frame of the trader, the less they have to be concerned about those real-time iterations. It can foul up a weekly trader, there's no doubt. But if you're a very short-term trader and your technology doesn't match the horizon of your term, that is when really things can go haywire.
Absolutely. If you're a scalper or you're day trading, you're trading off like a tick chart. There are folks who trade off tick charts. There are folks who trade off a 1 minute, 5 minute. I trade off of a 5 minute. Stock breaks out. I have a very defined entry. I have a stop that trails like a 9 exponential moving average on a 5 minute chart. I have like a whole series of ways of managing that trade. And so that data's got to really be spot on.
Yes, absolutely.
That's like the biggest mistake, and that you want to eliminate any technology issues, anything that's going to ding your fight or flight response. I mean, if you make bad trades, you need to learn from those. Those should trigger you. But if the technology gets in the way, that is not a good thing. That's just an extra layer of risk that traders don't need. And that's where a lot of newer traders and even veteran traders go wrong.
I like the idea of buffering because one of the things I do suggest to my traders is that they add in a pause between stimulus and response. So that pause is where objectivity can creep back in. So I'll give you perhaps an example. You see the indicator on a chart, just pause for a breath, no matter how short your time horizon is. Just take a deep breath in and out and then react. Rather than feeling like you're pushed and behind the 8 ball, get back in control and realize that you are in the driver's seat. So I like that idea of applying buffering to my own life.
Interesting. That's an interesting way of looking at it. That's a new one. I mean, I love the idea of a pause because there definitely is, when you're trading, a lot of trading is waiting. You're waiting for your setup. And the longer that wait is, you can become anxious. It's a human emotion. You want action. You want to make some money. We're all in this to make money. You're anxious to make money. I like to trade breakouts. So I trade 4 very specific patterns. And so one pattern I trade is called the cup and handle, which you may be familiar. Well, the
So let's
handle,
describe that first so that the
so
person
it's the
listening.
shape of, think if you can envision the shape of a teacup from the side, it's a pattern that lasts at least 7 weeks long, and it looks like a teacup. I'm drawing it backwards, obviously, with my finger. But the handle area, the stock is pretty much drifting sideways, maybe a little bit down. And this pattern shows up in every single market and on every single time frame. But when it's in that handle area, you can get really confident. I know this is going to break out. I know this one's going to work. And you can jump the gun. And it doesn't always work. So, there's that anxiousness in trading. So that idea of pausing, really confirming your breakout, really confirming your setup, that's a big deal.
Yeah. Look, the thing I like about looking at patterns as well is because what it is doing with a chart pattern is encapsulating human behavior. And
100%.
you can see it on a chart. You can almost hear what those little candles are saying. Green being the color of growth and greed and hope, and red being the color of blood and fear and destruction. And those types of ideas that are coming through the charts and using technology, that is what can be our edge, being able to read the patterns, being able to use those patterns for our own benefit. I want to talk more about technology, Eddie, because
Sure.
I am fascinated with this area. I am scared of it as well, though. Okay,
Yes.
I'll be open with you.
Understandable.
Yeah.
Understandable completely.
There's complexity involved, there's detail. And for the person listening, I bet you they're feeling the same way, where it's so tempting to get involved with the latest gadget, with the latest tech. But it is so scary because it, first of all, can cost a lot of money. And second of all, there's a learning curve with every new piece of technology. So
that's an understatement.
Yes. So give me some background about how to frame this for the person who is feeling like I am, scared of technology, but wanting technology to do some of the hard work for us.
Okay. I'm going to specifically talk about trading and computers for trading, because that's what the topic is. And we're talking about trading. But I can just tell you, I'm 56 years old now. I've been kind of a tech geek my whole life, but I feel overwhelmed too. The level that they're pushing the technology on us is faster than ever, and it's getting faster every single day. And if you have any kind of online business, I must use 300 or 400 different tools online for various things. And every single piece of software or tool or app, as we call them now, has its own learning curve. Every app on your phone has its own learning curve. You open your phone, and if they change the icon for your app, you can't find it. If you have 100 apps on your phone, you have to remember the name of all the apps. Oh, I have an app for the generator in my house to make sure it's working. What's the name of that app? It's not just called generator. It's getting overwhelming. And then with AI, obviously. So the name of my company is Easy Trading Computers. And there's a reason I call it easy, because I try to break things down into the simplest possible terms, so everyday people can understand. Think of your computer that you use for trading like a car. And inside that computer, there's a motor, there's an engine, and you need to have a specific level of horsepower. That motor needs to have a specific level of horsepower if you want to be successful trading with all this real-time data coming in. And so when you're going to buy a new computer for trading, you want to know how much horsepower you need for trading. First, start taking a look at how much horsepower your current computer has. And if you go to my website, if you go to easytradingcomputers.net, so that's letter E, letter Z, tradingcomputers.net /CPU. CPU stands for Central Processing Unit. But if you go to /CPU, I will walk you through a test where I'll show you how to figure out what processor's in your computer. And then you'll enter it into a little box, and it'll spit out something called the benchmark score. And the benchmark score is essentially how much horsepower your machine has. And the minimum benchmark score for trading is 25,000. Now, I know you don't know what that number means, but if you run that test, and if your number that you have on your current machine is below 25,000, you're at some risk of slippage. The lower that number, the worse position you're going to be. The real optimal level for today's trading in today's world is above like 47,000. And there are the higher end processors that don't really break the bank, run from anywhere from like a 50,000 benchmark score up to about 70,000. The latest ones are as high as 70,000. And 10 years ago, breaking 12,000 was like a feat. It was really something. So it's really the processing power has come a long way. And I love to use the car analogy. I like fast cars. I'm not going to get under the hood and tinker around, but I like the feel of a fast car. I like to drive the car. And traders don't really want to open up the side of the computer and figure out what's going on in there. And I get that. I don't even really like doing that too much. I want to use the computer to trade and to run my businesses and make videos and do all kinds of things. And use it as a tool that it's meant to be used for. And so, yes, I get that there's a tremendous level of complexity. So that's the big piece, because when you have that horsepower, your machine can process all that real-time data, can turn it into your charts and indicators much easier. There's no risk of slippage. And then the second part to that, what's really important now is we also need to have something called a GPU, or a graphics processing unit. And the best ones are made by NVIDIA. And I know this is confusing because not only do these graphics processing units handle your graphics, they do all the graphics, all the visuals on your screen, but they happen to handle AI. Now, most of the AI that's out there now is done in the cloud. So if you go to ChatGPT or to Grok, it's not being done on your local machine. That's done out in the cloud somewhere. But over time, especially with trading apps, so how is AI going to be used for trading? That's a big question I get asked a lot. And right now it's being used for back testing. So you develop like a formula or an algorithm, and then you back test it in a time frame or a specific instrument. You see what the results are. And then you see if you can apply some sort of automation on that algorithm. We used to just call it a formula, but now we use algo. Algo's the term now. It's funny how the terminology changes. But that AI is being used for that. And that's really not a new idea. Program trading was the original term, and that really started in the late 70s and the early 80s. And so AI does allow for a lot more computing power for these same types of algorithms, but it's not really all that new. And I mean, there was always this little fear that the computers were going to take over the stock market.
Yes.
That's kind of my whole career now it's like, I don't know if you've ever seen the Terminator series, kind of playing out like the movie feels like a little bit. And so that fear is still there in some ways, but we got to remember human beings are programming the AI. All of the knowledge that we have about trading is based on human emotion, because that's what charts and the markets are. They're mob behavior, human emotion. Just as you said, that's exactly what they are. And human emotion tends to repeat itself over and over. And that's why we can spot these patterns. So maybe AI can spot the patterns a little faster, but it's the same human patterns that it's going to be recognizing. And human beings can also be a bit unpredictable. So I'm hopeful that they don't take over the markets and make them untradeable. The markets have been around for hundreds of years. So
we were always worried about high frequency trading. That was one of the buzzwords, and it was going to wipe out humans. And now it's like AI is going to wipe out humans. And we know, Eddie, you and I have been in the markets for a very, very long time. that humans still rule the roost with this. So just to recap on what you've said here, because I think
Sure.
you've put together some beautiful points here. The first one is that we need to make sure that our CPU is tested and it has to be fast enough, ideally around 50,000 processing power.
That's for elite performance.
That's an elite performance.
Yes.
Yes.
Minimum 25. That'll get it done. But the more sophisticated you become as a trader, you want that higher number. So if you're running multiple trading applications, so I'll run TradingView and TradeStation, and sometimes I'll have a Zoom room going, something like that. And those are resource hogs. So you need to really have as much power as possible. A lot of folks are doing that. Trader funding has become a big thing lately. That's a whole other topic we don't really need to address, or we can if we have enough time.
So to do that, to test out that CPU, I've gone onto your website and I've just looked at it myself. So it's EZ, which is EZ for the Aussies, EZ yes. Trading the computers.net/CPU. And the thing I love is that there are some very simple to follow videos on that particular link so that you can see whether your computer is up to speed. And the other thing to have a look at is the graphics processing unit, the GPU, and fingers crossed it's by NVIDIA because that's going to take you the long haul. And the other thing that now, this is the thing I still want to tweak out, is AI. Now, you are on the cutting edge with technology. What is going to come up with AI for traders? Sure, right now, I can tell you how my traders are using AI. For back testing, yes, but also for back testing their own personal figures from their own trading plan to see whether they're staying loyal to their own breakout patterns, for example, their own archetypes, that perfect chart, that marriage material chart. Often my traders have up to 5 different archetypes, and a lot of the time, one of them will be one that they're not very good with trading. So using AI to detect what are the friction points, what are the areas that are not immediately apparent to the human eye, but when you look at large data across a trader's trading history, it can detect patterns. So using AI for that is a very unique way of getting introspection into your own system. What else is coming up with AI?
Wow. Honestly, I didn't even know about that. So I just
there we go.
Something. Wow,
I think I'm a bit of a groundbreaker with this, Eddie. Look, I've got to tell you, I'm so excited about what I've been doing with my traders with this. This is something that a lot of people don't talk about with trading, that introspection is an edge with traders. How you look at your results, how you think about the way you're thinking, which is metacognition, how you detect the areas of friction in your own system that are drawing down in terms of your overall performance. This is where I think AI has come out trumps right now, not even in the future, now in today's data analysis. This is where my traders are getting a really good kick. But what's coming up? What's around the corner for us?
Well, you just blew me away. I'm still digesting what you told me. Because I teach people how to trade, and I've spoken with over 10,000 traders, and I love the ideas and all the information regarding trading psychology. I've worked with a trading psychology coach. I've tried to learn as much about myself, especially when you're a new trader. You take a couple losses and a couple of dings. Every little piece of head trash that you have just rises to the surface and shouts at you. every little thing your parent, little dig your parent gave you growing up, just all comes to the surface. So what you're saying is fascinating to me, but I think there are people who are a little afraid of really delving into the psychology of trading. I think the word psychology even scares them. Probably less so for women maybe than men. I think men can be a little macho and, they want to rise above it. They want to figure it out. I don't know. I'm not so much like that, but I think men have like a bravado around that. So that's new to me. So I'm just digesting that. I think what's coming is that people are going to want to keep their algorithms and whatever they have figured out local on their machine. They're not going to want to have it stored out on a cloud somewhere where it can be stolen. Because who knows where our information is out there on the cloud? I mean, all of our information is out there. We know about all these hacks. It's just insane. There's no privacy anymore. Have you ever been just kind of hanging out, having a conversation with your spouse, and your phone chimes in? Like, Google all of a sudden thought it heard, "Hey, Google," and then it's like chiming in on the conversation. It's the craziest thing. It's just,
Yeah, they're listening.
there's no question. There's no question. So I think there's a privacy thing with having these language models and these other models right on your local machine. So there's a privacy part of it. Pattern recognition, obviously, in trading, in the markets and securities, is a big part. But I'm not really sure what's coming down the pike. I know all of the trading platforms are working on it. I don't think any trading platforms have what you're talking about, or having people analyze their trades from a psychological point of view is built in. So that's really brilliant to me. So I'm going to ask you a question. How are you using AI to do this? Is there an actual tool? Have you developed a tool? Are you just using ChatGPT? How are you using it?
I'm using ChatGPT and agent mode in ChatGPT to load in documents and to load in actual data from the trader's own results. Now, one of the things that influenced me a heck of a lot was Tom Barso, who is a market wizard who has been on the show. And he said that over time, every trade that you do just becomes one data point amongst thousands.
Right,
now,
right.
If that is the case, and if we can truly believe that in our gut, even if we've only done 5 trades, that means that each data point gives us data. It doesn't have to just be a win or a loss. It can tell us what are we more likely to do in particular situations. How does it fit in the big scheme of things? In general terms, are there some things that we are better at doing than others? So feeding all of this information into ChatGPT, asking it to be a harsh market critic and a trading coach, that can be the prompt to critique my results, show me areas to improve, show me areas that I'm excelling at, and give me suggestions for improving in the future. That is such a holistic way of approaching our own trading development.
You have to trust that its critique is accurate. There's definitely a trust element there.
The more you put in, the better it is. So when I first started working with ChatGPT, it wasn't as smart, should we say. It was giving me many more misdirections, but I love this part of it. This is definitely my hot button in terms of being able to explore the future with my traders. So the more that I've been able to work with my own ChatGPT, the more it's understood. So one of the things that I think is a hindrance with the type of style of trading that my traders do is there's a breakthrough pattern where a candle penetrates from below a previously established resistance line. Now, we don't act on that breakthrough, but we look for a breakout where a candle is located completely above the level of resistance, where no part of that candle, including the tail, is touching that resistance line, in line with the setup. So the setup has to be that it's already in a stage 1, breaking out to stage 2, for example. Now, if as the new trader, you don't know what I'm talking about, hang around, because as you listen to more Talking Trading episodes, you will understand exactly what I'm saying. Give yourself time to learn. So with that, that's where computers struggle, because that is a visual, subjective, less than perfect science. And I think, unless I'm completely wrong here, that is where the human input is required.
Yes, but I do believe that is something that AI will be able to handle, if not already, to be able to
move in that direction.
I mean, do you want to hand over your account to a bot to do the trading? A lot of people are already there. There are plenty of bots out there.
They really do. It's something that I'm not as comfortable with currently, but I know there are a lot of completely automated algo traders, and you would very much need to make sure you've done your back testing and your homework. Now, Eddie, I have loved having you on the show. I know that there's a resource that you want to give my traders, which is awesome, because so many of us don't know where to start with buying a trading computer, with upgrading our own trading computer. It's called the Complete Guide to Trading Computers. Now, this is the page to go to, eztradingcomputers.net/get-guide. I'm just going to say that again. So eztradingcomputers.net/get-guide. Now, what will people find on that webpage?
So they will see an image of the guide that I've written. You just put your email address in there and click the Get Guide button, and I will email you the PDF. It's about a 40-page PDF where I explain to you the types of things we were talking about today, how to optimize your computer for trading, exactly what you need in plain speak, very simple speak, no tech jargon. I'm not going to try to baffle you with BS, which I think a lot of techies try to do. I'm a trader. I want you to understand. I don't want technology to interfere, to be some type of trigger for your fight or flight response between you and the market. It's your window to the market. Your computer is your window to the market. You want a gigantic, clear bay window overlooking the ocean where you can see everything on a perfectly sunny, clear day. That's what you need. And that's why I'm going to try to help you figure out how to pinpoint. And so that's where that guide is the best place to start. The YouTube channel is a cool place also, which is you go to youtube.com @EddieZ-trading or EddieZ-trading. You'll find my YouTube channel there. Same concept holds, where I really try to explain the technology in the simplest to understand language.
Eddie, we have made you bilingual by making you speak Australian. I love it. You are my favourite tech guy. Thank you so much for coming on the show. Any parting words?
My pleasure. I think you and I can have other conversations. So I'd love to have you on my podcast as well. I'm newer to this. I think you've done a beautiful job, and you've made it so easy and interesting. And thank you so much for having me. I really feel blessed that you had me today. Really enjoyed the conversation.
Beautiful, beautiful man. Now, for the person listening, make sure that you replay parts of this podcast, because there is a lot to take in, and get Eddie's Complete Guide to Trading Computers. And until the very next episode, happy trading.
Thank you so much. Happy trading.